Good morning, ladies and gentlemen, or good afternoon, good evening, depending on where you are in the world. I know it's probably a little bit late to say, but I should probably start the session by saying Happy New Year. First session back of 2026, and very happy to be presenting and here for you guys, hoping to deliver another session of value to help you increase your performance, become more consistent, and overall just become an all-round better person and trader. That's the intention of what we're working towards throughout the space of these sessions. Now, I want to start off these sessions fairly light. I want to share some insights that I've learned from my breakaway, give you just a real and open and honest conversation about what my performance has been like, things that I've learned during this time, and I think the best mindset that you can take going into starting a fresh year. This is something that I have typically struggled with. I know this has been a problem for me in the past, starting off the year on the right foot and actually starting from a place of actually understanding about how to come back from a little bit of a breakaway. If you're watching this, I'm hoping you did give yourself some downtime over Christmas, New Year period. I hope you took some time back, a little bit of a step back from the charts, and you spent it with family, friends, loved ones. I always believe these times are important, and something that I have both personally experienced and I continue to see time and time again is that traders tend to be the worst at actually giving themselves like downtime, actually having a period of time where they step away from live markets, when they step away from execution and they actually take a break. We almost feel guilty for it. We forget the fact that in pretty much every other job or profession, having things like annual leave and holidays are very, very normal things. And actually, they're very, very beneficial in terms of long-term performance. It's why they're encouraged. And I think us as either full-time professional traders already or as aspiring professional traders, this is something that we should want to take into consideration as well, right? If you're familiar with some of the sessions that I've done here before, you'll know that one of the things that I talk a lot about is the idea that trading it's not really a normal job, right? It's not something that you can just kind of show up at 9 o'clock, turn off at 5 p.m. and expect to get paid for your time in the markets. We are essentially playing a performance sport, and we have to treat the markets as such. We have to treat it in a way whereby we are approaching this where we have the best mindset, a good ability to be able to execute and stick to our plan consistently. And that's what's going to give us the best odds of actually making money over time. No guarantees, of course, but it improves our probability. And that's the only thing we really can control as part of how we approach this game. So today I kind of want to, like I said, I want to keep things a little bit light. The structure is fairly loose, but I want to talk about coming back to the markets in the right way. I'm presuming most of you have started to make that return now. I usually give myself often 2 or 3 weeks before I start looking at live charts again and start attempting to place some positions into the market. So I want to talk about the right mindset in being able to do that. But also I want to cover, again, some things that I learned from my time away and just some interesting insights and conversations that I've had with a few traders, some of my clients, some community members that I've been working with. And I think there's a lot of lessons that we can kind of take away from these points. Now, the first of which, I want to start by talking about the idea of how you approach January, right? I want to start by saying I understand that January is going to be a different period for some people. Some people like to start slow. Some people like to come out all guns blazing. And of course, depending on your edge, depending on your strategy, depending on the conditions of the market, this is going to give you varied results. For some people, statistically, you'll have data to support the idea that actually January might be a very, very strong month for you, and therefore starting on the right foot is very, very important. But for others, you might find that January can still be a little bit slow, a little bit lackluster, and maybe it's something that you want to take a little bit slowly. Now, specifically, and I'm going to talk to those of you that are especially somewhat discretionary or mechanical traders, that have an element of you being part of your performance. You don't have your strategy coded or running kind of, automatically in the background without your intervention. If it requires you to be a part of your performance in the markets, I think something that you have to consider is that when you have a certain period of time away, you need to spend a short amount of time going into the start of the year working on what I like to think of as mainly just alignment, getting yourself back into sync, into the flow of things. Because if any of you were much like myself, the December holiday period was a time to kind of wind down. I didn't take a lot of my typical routines so seriously. I wasn't exercising as much. My diet wasn't as good as it normally is. I wasn't waking up at the normal times that I would. I wasn't doing anywhere near the amount of coaching calls that I normally do throughout a week, and I wasn't active in the markets whatsoever. So the routines are completely different. And again, you guys are going to experience that in your own way. But it's important to understand that getting back into a normal swing and flow of things can take some time. And there are certain things that you can do to help improve that. And some of which I want to discuss and go through today. But a lot of it, I think, actually starts from a mindset perspective. It starts with your psychology. It's about aligning the right expectations. It's about developing the right perspective and just returning with all the right intentions. I think a new year, as much as I don't believe in the whole idea of like the new year, new me, I'm not a big fan of like having these big New Year's resolutions and saying everything's going to change this year. But I do believe having the right intentions and actually starting from somewhat of a blank slate can really help people psychologically. If you had a really good year or a really poor year last year, wherever you kind of sit, I think starting from a blank slate is a good way to think about things, because that's the mindset that you have to carry into each and every day in the markets. Whether you've had a great day yesterday or last week or last month or last year, or on the opposite, if you've had a really poor day yesterday, last week, last month, last year, you have to remember that you can't afford to bring that mindset and performance with you into the following day. Because again, this is a game of probability. There is no certainty behind what we do. Just because you had a really good day or a good period, the last calendar month or last year or whatever it was, it doesn't actually guarantee that that's going to continue going forward. And if you bring that confidence, and in some cases it's a little bit of arrogance or ignorance into the market with you, it can, the market can humble you very, very quickly. And from a risk management perspective, that's probably something that you want to avoid. And again, on the flip side, just because you may have had a somewhat poor performance, maybe it's a period of underperformance, maybe it's a period of drawdown, maybe it was just another losing year in the books as part of your development journey. You have to remember that this year doesn't necessarily have to be the same. So kind of leaving yesterday's baggage behind and focusing on what's to come in the future, I think is a very, very important part of the mental game that I really want you guys to be focused and kind of tuned into, because it's a big part of what coming into January the right way for me is all about. I heard this really great philosophy a fair few years ago. And at the time when I heard it, it was applied to just general day-to-day life. It's something that I think about a lot when it comes to trading and how I approach the markets personally. And it's always something that I reiterate. I wish I was poetic enough or smart enough to come up with this concept myself. It's most definitely something that I stole. Couldn't quote you the source for the life of me. I'm sure it's just a quote that's kind of thrown around. But for me, it carries a lot of weight as part of everything that we do. So I want to share it here with you guys. And that is the idea that there are 3 keys to living a good life, right? 3 keys to living a good life. Step number 1 is being able to learn from the past. Step number 2 is being in a position where you actually start planning for the future. And step number 3 is learning to actually live in the present moment, right? Learning from the past, planning for the future, but actually living in the present moment. And we've all heard those, cliche quotes, the present is a gift. That's why, I'm sure I'm butchering that quote as we speak, but we've all heard these quotes, right? About how it's important to live in the present moment. It's a philosophy that I take very, very seriously. And I've built my whole, I guess, social media presence around this idea. Like if any of you guys follow me on any other social media platform, you'll know I go by trading in the now. And a big idea behind that handle was all about this idea of just living in the present moment, learning to accept situations for what they are and not what you wish that they could be, It's something that has served me in many areas of life: business, relationships, life in general, personal development, trading, most definitely. Everything has been improved by that philosophy. Now, that quote goes on to talk about the idea that actually the reason most people struggle to develop, to grow, to become better people, to become better businessmen, entrepreneurs, traders, husbands, fathers, siblings, whatever it is, we tend to get stuck in a few different places. And it falls in these same three paradigms, right? The past, the present, and the future. Now, where people tend to go wrong is, instead of learning from the past, they're haunted by it. They cling on to previous experiences, which they can no longer change, and they let that determine what actions they take today, and that subsequently influences the outcomes that they get tomorrow, right? So instead of learning from the past, they're haunted by it. Instead of planning for the future, they live in anxiety. They live in worry. They live in fear about what could happen, and they focus on all the things that they can't control. Now, as a result of your mental state either being haunted by the past or stuck in paralysis about what may come in the future, we end up ignoring the only moment that we actually have power over, and that's the present moment, right? It doesn't matter if you have the best lessons. It doesn't matter if you have the best plans. If you can't turn those into something actionable that you can do in the present moment, they become absolutely meaningless. So I found a lot of power in this quote. And like I said, it's something that I carry with me on a day-to-day, week by week, a month-by-month basis. And it's something that I think about a lot, that regardless of what has happened today, yesterday, last year, I want to be able to look back at that experience, and I want to be able to learn something from it. I want to think about where I want to be 6, 12 months, 5 years into the future. And I want to be able to say, okay, what do I need to be able to get to that level? And then similarly, from both of those situations, from both of those time periods, I want to be able to understand what actions do I need to take, both from the lessons from my past and building those into actions that can turn into outcomes that align with the future goals that I want to ultimately be able to create, right? So this is something that I'm very, very mindful of, and something that I'm definitely thinking about coming into a new year. Now, something that I touched on at the start of today's session was this idea that we as traders are typically terrible when it comes to taking breaks. I honestly cannot tell you the number of conversations that I've had with traders starting the new year. And one of the first things that I always politely ask from small talk is, how was your time off? How was Christmas? How was New Year? What did you get up to in the time that, hopefully you had some downtime? And I'm always shocked by the number of people that turn around and be like, downtime? What's that? Downtime's for poor people, right? You get all of these wild things thrown back at you, and people basically just unwilling to take any downtime over Christmas and New Year. And I actually think I understand the mentality. I understand it because I used to be one of those guys. I used to be that person where in my first few years in trading, I would be trying to grind out every pip that I could over the Christmas and New Year period, regardless of what the conditions were in the market. If the markets were moving, if they were open, if my broker was allowing me to do business, you better believe I was trying to make some money from the markets. And I think when you unpack what's going on psychologically, you start to actually understand that a lot of our drive to do that is not necessarily because we're chasing money. It's definitely true for a lot of people. But actually what we're trying to run away from is this feeling of being inactive, this worry about what things are going to be like if we're not doing something productive to get us closer to the person that we want to be, or the goals and the milestones that we want to achieve. And this is something that plays out in every single one of our minds, again, whether we're really conscious of it or not. This is something that a lot of traders don't often actually think about. We often in our head, again, whether it's consciously or I think most often it's subconsciously, we start to believe that if we're not watching price, there's a disconnection between us and the market. When we're not actively taking trades, there's no dopamine rushing through our body, and it provides a kind of a sense of discomfort. If the market keeps moving and you know that you're not watching it or attempting to participate in it, it drives that feeling of FOMO, right? we all have this narrative in our head in whereby we confuse the times where we're not trading with this idea that we're falling behind. And this is, it's dangerous for a lot of reasons, right? As we already kind of touched on at the start of today's session, trading it's not a job. It's not something you can show up with, 10% cognitive ability and 20% effort and expect that you're still going to get paid in the exact same way. There are most definitely some jobs that exist where you could just show up and be present physically, but absolutely switched off mentally, and you will still most definitely get paid at the end of the day. Trading is not one of those things at all, right? Trading is very cognitively demanding. It's not necessarily, I would say, physically exhausting. It's not a manual labor job by any means. We're basically just sitting here and clicking a button all day long with an attempt to try and make a living. And so the cognitive strain that it often takes, it accumulates silently for a lot of us. And that's something that most of us, we disregard. We kind of brush over it. We tell ourselves that, you need to man up or double down or hustle harder because that's what the culture tells us to do in this day and age. Now, in my experience, I find that when you unpack most traders' performance over time, especially the periods of underperformance, especially when it's something psychological, it's not just a natural variance of market conditions, I tend to find that often when your performance is low, it doesn't necessarily come from one big blow up moment which happens out of the blue, right? It erodes slowly over time. And a lot of people miss those small and subtle clues that get left behind, right? For some people, it's, today I'm not going to check my pre-trade checklist before I do this, or I'm not going to make sure I've double checked my position sizing before I execute on this trade. It's these small little cracks in your process which are so easy to overlook because they feel absolutely meaningless at the time. But those small cracks end up leading to like this total destruction or this one big blow up moment. I tend to find that actually having a break from the market, it gives you an opportunity to create that detachment that allows you to be a little bit more objective with what you're seeing in the markets, which is something that we often lose, especially when we have positions on and money on the line. It's something that's very easily diminished over time. I also tend to find that having a little bit of time away, it resets our emotional baseline, right? Trading, and I'll be the first one to say this, it's a stressful job. There are most definitely more calming and relaxing jobs that you can have, but trading is definitely not one of them. And if anybody tells you that it's completely stress-free and emotionless, they're probably not trading at any significant size for them respectively, right? I don't think there's any specific dollar amount that is uniquely stressful for everyone, but everyone has their own personal risk tolerance. And when you're trading at a size that matters, there is going to be some stress involved, and especially during the short-term variance that you're going to experience in the market, the losses, the downturns, the periods of drawdowns, the extended periods of underperformance, whatever it is for you, they're going to have a certain toll on the body. Now, if you don't ever learn to recognize those tolls and actually have those planned and intentional breaks from the market, it's going to have a toll, right? There's only so long that you can go before your mind starts to underperform and starts to shut down and doesn't operate at peak performance. And again, trading being a performance sport, this is something that we most definitely have to be mindful of. Now, the reframe that I took many years ago is honestly, and I think I've probably mentioned this a few times before, but I neglected journaling and collecting data at the start of my journey, right? And generally, this was the first 5 or 6 years of my journey. This was something I neglected. I thought it was some fluff, some fugazi that people talked about but didn't really carry any weight, until I took it seriously and actually saw the benefit from doing it myself. And actually, when you get serious about journaling, collecting data, then I would actually argue the reframe that most of us need to make is that the time where we step back from live execution, they're actually going to be your most productive periods of time, right? And I say this because when you actually get time to take a step back and reflect over your data, test out new ideas, go over your journals, start to spot those patterns of behavior and bring them to a more conscious level of awareness, it stops you making the same mistakes that you've typically been making in the past, right? You stop becoming emotional and you start becoming more data driven. And that's, for me, the best way to start improving your performance in the markets. It starts with having that right foundation of understanding who you are and how you operate. And that generally comes from your journal. And it comes from knowing your edge as well as you possibly can. And that, for me, comes from an ample amount of data. So for those of you that are either maybe didn't take a break whatsoever, or you've come back in January and you're feeling like you need to make up for lost time because you feel guilty for being off, I want you to remember that if you use your time off the right way, it doesn't actually make you worse. It doesn't disconnect you from having a good performance. It's actually going to reveal the things that were already there, and provide you a blueprint for getting to where you need to be. And so for a long time, whilst I hated the slow periods, the choppy periods where I knew I should have stepped away, I've now started to welcome them. I now like the idea of just taking a little bit of a step back and understanding that it's okay to have some downtime. It's going to be good for the mind. It's going to be good for the body. And ultimately, if I use that time period in the right way, it's going to be good for your performance in the long run as well. So these reflection periods are exactly what I found for myself. They're exactly the same thing that I try and advocate and teach to many of the traders that I work with and conversate with on a month-to-month basis. And it's the exact same advice that I would give for each and every one of you, right? Don't feel like you have to start January with this urgency to make back over the 2 or 3 weeks that you've maybe been out of the game, right? I started trading last week for the first time in 3 weeks. I wound down midway through December. I had 3 full weeks off. 2 of those, I was not looking at any live charts. And coming back, at least the first week into January, I largely spent it just reviewing my performance over 2025 as a whole. I like to do that once, the kind of the yearly candle has closed, that I use TradingView and I switch it to a 12-month perspective. And I like to see what the markets have done that I'm interested in. It just becomes a very deep reflection period for me. Now, I want to go into and share fairly openly some of the things that I learned about my performance. I'm going to do one of the things that I do very rarely, which is I want to pull up a chart and I want to show you guys some of the insights and the kind of takeaways that I had for my own performance. And again, this doesn't serve as a metric for you guys to start measuring yourself on, but it should give you an idea of one of the biggest takeaways that honestly probably took me the longest time to accept as part of my ongoing evolving journey as a trader. But it's something that I've started to become a lot more comfortable with, whereas before it was an idea that I most definitely used to reject very, very hard. So Kieran, would you mind being able to share my screen? Thank you so much. Super efficient. Okay, so what we have on the screen here, I'm hoping all of you guys can see, we have a chart of euro dollar. We are currently on a daily chart and I have come nice and prepared. I've blocked out a period of time here, which if I get my cursor up, which you guys can see is basically the first half of 2025, right? The first 6 months of 2025, I've blocked this off in a shade of purple, which you can see here. Now, to give you a little bit of context about what I'm going to share with you guys here, I'm largely a swing trader. Most of my decisions generally come from a narrative that I'm getting from a daily time frame. And I generally tend to hold trades for a few days, sometimes going on a week, sometimes a couple of weeks. But that's kind of where my edge tends to live. I've been down the route of short-term trading. Just didn't really find it worked good for me as a person. And I found a lot of comfort and ease in really having the daily time frame as my a kind of base of operation. Now, I do drop down to an hourly chart generally for execution. I've messed around with the 4-hour chart a little bit, but generally daily and hourly are kind of my livable zone where I spend the vast majority of my time on a day-to-day perspective. Okay. Now, what I want to share with you guys is I have been getting very, very serious about documenting my journey. I've been very, very keen over the last 12 months specifically about really journaling everything. I'm creating video journals of everything that I'm doing in the markets, whether that's, daily thoughts and actions, trades that I've taken, reflection periods, the same things that I would do in kind of talking to myself. I'm just getting them down on video and making sure that my journals all reflect everything that they need to. But something that it became really, really obvious to me in ending 2025 is that my performance at the start of the year was significantly better than my performance in the last half of the year, right? And so when I would, and I'm talking, much in the early days of my journey, when I went through a period of underperformance or drawdown or whatever it was, the first thing I would do is I would start questioning my strategy. I would say, something's clearly broken, or it was working and it's not working anymore. And I need to change something up. I need to tweak. I need to shift something. I need to, figure out how to make sure that this doesn't happen again. And psychologically, what I was doing in that moment was not accepting the uncertainty of the market, right? Not accepting that some market conditions, my strategy is going to work really, really well. And some market conditions, it's not going to do so well, right? So I want to demonstrate kind of exactly what that looks like and show you the mindset shift that I went through in real time over the Christmas period, which has given me some of the biggest conclusions that I took away from last year, right? So as I mentioned, it's a daily time frame, euro dollar. This is one of the markets that I look at and actively trade. And I found that looking back over my performance in the entirety of 2025, I did far better from January to July than I did from, actually July through to the end of December. Now, if you look at things just from a journal perspective, right, you're looking at just trade entries, you're looking at behavioral patterns, you're looking at maybe the thought process, it gives you kind of a one-dimensional perspective of your performance over time. Now, when you start to overlay how you've done by actually comparing that to market conditions, you start to get another dimension or another perspective of how you've actually done over time. So again, to give this context over what I'm going to say here, I want you guys to remember that most of my decisions come from a daily chart. And a lot of that, I'm a swing trader in nature. And a lot of what I need as a swing trader from a daily perspective is I need volatility. I need movement, right? If you have a daily time frame which is stuck in a little bit of range, that for me is not great conditions. And so if you look at the time period that I've blocked off here, the first 6 months, right? This is the purple shaded zone that I've currently drawn up here. This is the first 6 months of 2025. You can see that whilst we did have some areas of chop, right? We didn't just have a one-sided movement the entire way. We did have some fairly nice swings in price, right? You can see this period here, this period here, this period here. Even from a counter trend perspective, I'd like to hope that you guys agree that this is a very bullish cycle of the market. But from a counter trend perspective, things moved fairly well. Price action was fairly clean. We had some fairly clean moves in the market. And if you look at things from a volatility perspective, the lows that we created in January from the high that was posted at the end of July, we had around 1,600 pips in range for euro dollar, which again, like I said, I did fairly well from January going into July. But then if you look at my performance from July through to December, I ended one of those months basically breaking even, like 1 hour up during that time period. And I spent November actually in drawdown. And some of the other months were mostly just very, very choppy periods. I didn't have a fantastic performance if you look at the last 6 months of 2025, at least nothing to shout home about. Now, on paper, you could look at that and you could start questioning yourself, your performance. What am I doing wrong? Why is my strategy not working so well? But actually, when you look at it from a very pragmatic perspective and you start looking at things, typically, again, just from a volatility perspective, right? Have a look at this area of price, which I haven't yet shaded in, but it's showing you essentially the last 6 months of 2025. Just visually looking at that, you can see the difference in market conditions, right? Very trending market for the first 6 months of the year, and then fairly flat market in the remaining 6 months. And if you actually draw up again the H2 low to the H2 high, you can see we had around just over 500 pips in terms of volatility and price movement. Now you compare that to the 1600 pips that we have in the first half of the year. That is 30% of the volatility that we've experienced. Now, again, for someone that trades a daily time frame, only having 30% of the volatility, and I mean, look at some of the market conditions here, right? This period here where we basically just chopped around up, down, up, down, up, down. This, for me, is logical periods of the market where I am likely to get chopped up, right? If you fully understand and take on board that every strategy is going to have a period of time where it underperforms, not every strategy is going to work well in every market conditions. At least that's been my experience. Maybe there are going to be some diamonds in the rough that can prove that wrong. But generally speaking, most of the traders that I've seen and worked with and had conversations with, they all experience this dynamic. Your strategy goes through a period of time where it works really, really well and you thrive. And then sometimes you'll have periods where conditions change, your strategy doesn't work so well. And your job during that period is not necessarily to fix and to change stuff, but it's sometimes just to manage risk so that you ride back through a period where things start to go fairly well for you again, right? And that was always something that I battled with. I've always, and this is something I'm still working on in all honesty, I've always struggled to identify the shift between one market condition to another and then to be able to adapt in a time frame accordingly to smoothen out my results over time. What I generally tend to experience is I have some months where I'll absolutely clean up and I'll do really, really well. Because moves like when you get nice big trending moves, what I am really looking to do is to stack into those positions. And so where the markets do move like that, I can really, if I get lucky enough to be on the right side of those, I could do really, really well during those periods of time. But choppy periods, you know, much like we've seen here, much like basically the entirety of the flat periods that we've had in the last 6 months, it's where I get chopped up, right? And it's something I'm always working to improve. In an ideal scenario here, I would love to have a different strategy that I could just deploy and it can start to benefit in those conditions. But again, it relies on me being able to identify what that looks like and giving myself some type of, you know, mechanical or discretionary metric that I can start to look at to identify that shift. Again, something that I'm most definitely not perfect at and something that I'm definitely still working towards getting better at over time. But the reason that I show you this is not just to kick myself about my last 6 months of performance. Whilst I ended somewhat profitable, it most definitely wasn't the performance that I would have liked. By, 10 years ago, 7 years ago, maybe, I would look back at times like this and I would be questioning myself, like, why is it broken? What could I do better? And it's not that I'm not looking to improve now, but it's that I'm very much more acceptive of the right idea that sometimes my strategy is just going to get chopped up. And I think this is a good time to remind everybody on this call that your job as a trader is not about predicting the market, right? There's no 100% win rate strategy that exists, at least none that I've been exposed to. Maybe I'm just not good enough. I don't know, right? I've never met any trader that has maintained 100% win rate for an extended period of time over a variety of market conditions. So if you can accept mentally, psychologically, that actually there is no perfect strategy, then actually trying to avoid losses and trying to refine your strategy to a state where it never goes through a period of underperformance, I would actually argue is somewhat counterintuitive, right? It's counterproductive, Because the mistake that I made is when you're trying to optimize constantly for every shift and change in the market, instead of getting a better return, what you actually end up with is a far more inconsistent approach. And that's what kind of screws a lot of people in the long run. And it's something that I've managed to improve my performance in the long term, not necessarily by developing all these new strategies and methodologies and technical or fundamental analysis that have drastically improved my upside, but it's just I've got far better at accepting the downside, and therefore that has made me a much more consistent individual when it comes to applying my edge in the market, right? So I want you guys to think about this for your performance. And the real nutshell of like what you have to take away from this is I can only make a conclusion like this because I have a lot of clarity on what my strategy looks like over time. I understand like what conditions it works really, really well in and when it's actually really likely going to suck, right? If I zoom out a little bit further here and we start looking at things now from, I mean, you can see quite a few years of price action on the screen. If you look at the price action from, let's say, let's go back to, this is one I always like to highlight. If you look at 2014, which is this area of price, to 2015, right? I think we could all agree during this period of time, we had very, very bearish price action, right? Very, very bearish price action. I would argue it was actually very, very clean in the way that it moved. We had very clean structure. We had, breaks of support, retesting as resistance, continuing to move down in one direction. Super clean. Had I had the strategy that I have now, and had I encountered market conditions like we had in 2014, I feel somewhat confident to say that I would have done really well. I would have had a very profitable year. Unless I had, really like my psychology working against me, I should have done really, really well during that time. Now, fast forward and look at the following 2 years, from 2015 to 2017. Can we all agree that the conditions here are very different to the conditions here? I'm not saying I couldn't have made money during those conditions. There were most definitely periods where trends did evolve and markets did move in a particular direction, at least from a daily perspective. Most definitely there would have been periods where I would have made money, but I can't accurately tell you without testing it. Would that, at least on paper, would that have been a profitable period in that 12-month or 24-month cycle? I don't know. But can I confidently tell you that I probably would have made less money during this time period than I would in 2014? Probably, yeah. Right? Nothing wrong with the strategy. Just changes of market conditions and accepting that not all market conditions are going to be equal. Right? The thing that I've learned to take away most, if anything, is to understand that expansive behavior in the market typically leads to contraction, and contractionary periods typically lead to some kind of expansion. And that's something that I'm just always thinking about going forward. So, when you look at the range that we've been stuck in the last half of last year, this doesn't concern me so much because I understand that whilst we have contractionary periods now, I understand this is not going to remain that way forever, right? Something is going to change fundamentally, politically, economically. There's going to be a driver. There's going to be something that gets it to break out from this kind of 500 pip range that we've most largely been stuck between. I would actually argue it's spent more time in kind of this realm here, which if you look at it is really a range of 260 pips. Nothing really, right? In the grand scheme of things, I guess. Depends on the perspective of your time frame, but for me, it's not a great deal of price movement to be working within. But it will change. It will start to break out, and I am going to do my absolute best to be on board with that when it does happen and a new trend starts to emerge. So that's kind of what I want to share with you guys, right? Very much a raw and honest reflection of what my at least last half of the year has most definitely been like. But giving you guys an insight into the mindset that I'm carrying on from that last 6 months and how I'm looking at things going forward, right? I'm not super fussed or concerned about that short-term period of underperformance. I'm trying to focus on, years and decades. What is my performance going to look like in that time period? If I'm still going to be crying about this 6 months performance 5 years from now, there's something fundamentally wrong psychologically, right? I can't afford to go back to the idea of, what we talked about at the start of today's session. Learn from the past, plan for the future, live in the present. The moment I start getting haunted and weighed down by things like this, it doesn't work for me in the long run. Okay. Kieran, thank you so much. Feel free to minimize the charts. Thank you so much, man. Appreciate it. So I hope that was helpful for you guys, right? And again, I always like to keep these as raw, as honest as possible. I try and host and conduct these sessions with the perspective of sharing my honest realities and experiences in the market. I'm always the first one to say, and again, for those of you that have tuned into some of these sessions before, you'll know that I'm always the first one to say I'm not a perfect individual. I don't consider myself the world's best trader, but I have most definitely found my edge in the market over a larger sample size of time, and it has allowed me to monetize over that longer period. I most definitely will go through periods of underperformance, much like I consider my last 6 months, right? But I trust that over a much larger sample size, I will do okay. And the reason that I'm really stressing these points and I'm really trying to be as open as possible and share things like this is part of everything that we are doing here on Darwinex is all aimed with this long-term perspective. We don't want you guys to come in with this mindset of, I want to reset, I want to start over. I would actually argue that the most trust that I could place in any individual as a trader or an investor is the period that I want to see is what happens when you go through a period of underperformance and how do you recover from that? That's what I really want to see. I'm more impressed by a person that has gone through cyclical times in the market where they've underperformed and they've come back and they've reached a new watermark high. That's what I give the most credit to. You could show me somebody else that has a perfect track record, taking barely any losses, very high win rate, consistency week over week, month over month. And don't get me wrong, that's most definitely something to applaud. But for me, the truest test of your long-term performance is really about what happens after a period of underperformance. I have seen countless traders, and this is not just in Darwinex, but I think more so, especially in the typical retail prop firm space that a lot of traders are getting into in this day and age, much like myself. But we kind of get used to this kind of boom and bust cycle. And the prop firm space is very forgiving for that because you can just hit a reset button. You can blow a challenge and start all over again. And monetarily, there are definitely ways to make that work. And there are people that have done amazingly in the space. And I don't say this to discredit people from monetizing off of that boom and bust cycle, right? I don't take that away from them. I think that's a skill set in and of itself. But, and I always want to make this clear, I think you have to be able to understand that is a very different mindset to a professional trader, right? A professional trader is not someone that goes into a deep period of drawdown and takes it very, very lightly and is looking for some kind of reset. If you are a professional and you're managing real investor capital and you take a 45% drawdown on, let's keep the number simple. You take a 50% drawdown, right? You need 100% return just to get back to break even. Psychologically, for most people, that is already destroying for a lot of people. But in that situation, when there is real capital on the line, do you think you as a trader, as a risk manager, can approach your investors and say, hey, you know what? I know I screwed up the last 3 to 6 months, but how about we just add more capital, bring me back to our starting balance, and we'll give this another go? You think any investor is going to take that seriously? Do you think anyone is going to take your performance seriously over that period of time? At least in my experience, and I'm not telling you that I'm the world's most connected person in the world, but I think of this from the mindset of, if I was an investor and I had millions and millions of dollars to my name, which I don't, if I was going to trust someone to manage my money, the skill that I want to see them possess is I want to know that they can manage risk during periods of uncertainty? I want to know, of course, yes, is there an upside attached to what they're doing? For sure. But can you go through a difficult time in the markets, have a period of underperformance, experience a losing streak, whatever it is, and then bounce back? Can you do that? Because if you can't, then you're missing one of the fundamental skills for long-term survival and really being able to thrive in this game in the long run, right? So that's, I guess, a mindset that I think about a lot and I carry with me. I put a lot of emphasis on this. And honestly, the reason why I share this and I talk about this so specifically, especially with the context of what we're doing here in terms of Darwinex, is I think from a psychological perspective, it gives you a great advantage to carry this mindset with you because it forces you to think long-term, right? And again, I'll be completely transparent with you guys. Since coming back to trading last week, I started last Monday, I have taken 2 trades and they have both ended in a loss. 2 trades, 2 losses, and I've had 3 weeks off of the market, and I'm coming back off of the 6 months of a period of underperformance. You think that doesn't feel heavy? You think it doesn't weigh in on my mind? You think I'm not conscious of this sort of stuff? 100%. But I'm also very, very mindful that if I bring that baggage to my performance today, it's not going to help me to become a more consistent trader. The only thing that I can focus on is reminding myself that this is a very small sample size of time and trades. They're not going to mean anything in the grand scheme of things. And I would argue if they are, if the losses that you've taken, if the period of underperformance is that meaningful, you're probably trading at a size that is too large, right? You should be able to zoom out enough to understand that these short-term variances in the market, they don't mean as much, right? I started today's session by talking about this idea of 2026 being a blank slate, right? Forget about what happened in 2025. 2026 is a fresh start. If I let 2 early losses coming into the year determine the tone and the narrative of what's going to happen for the remainder of this month, possibly spilling over and affecting my quarter, possibly screwing up my results and, completely changing what my long-term 12-month performance is going to be for this year, I'm digging myself a hole here, right? I have to focus on the idea that I'm trading at a size that I'm comfortable with. I'm focusing on an approach that there is no edge in the outcome of 2. There's only randomness. The only thing that I have to focus on long-term is bigger sample sizes, larger periods of time. That's it. That's all I got. Why? Because it's all we can really control, right? So take that on board. Think about that in terms of your own performance when you're going through your own reflection periods. And this is something that I'm actively doing over Christmas. It's one of the things that I was reflecting on, but I think it holds a lot of value during that time period to be able to really understand what that means in terms of your long-term performance. Apologies, I know there's a couple of you in the comments here. What's up, Loki? Hope you're doing well. David mentioned a little while ago. David says, the toughest thing for me being an algo trader is having 3 months in the green, getting 3 months new allocation, and then January has been red right from the start. You really do start to doubt. David, I mean, your comment, your question here is, I guess not really a question, but your comment here is very, very timely, I guess, with what we've been discussing throughout the space of today. What you have to understand during this period, I wish, firstly, that I had some magical words of wisdom that would make it all disappear. Make all of those negative thoughts, feelings, weights, make them all disappear. It doesn't necessarily work that way. But what you have to understand, and the thing that gives me most comfort during these periods, and I'm in a very similar position where you start to experience that natural feeling of doubt when you have these periods in the market, right? I want you to remember that purely from a psychological perspective, one of the things that I talk a lot about is we tend to experience recency bias, right? For those of you not familiar, whether that's David, whether it's anybody else that's watching this session, recency bias is the natural human tendency for us as human beings to put more weight and emphasis on things which happen recently as opposed to what tends to happen over a larger sample size of time, right? We do this in every area of life. This is not unique to trading. We do this in relationships. You ever get out of a bad relationship or you've been cheated on, your partner was unfaithful, you're going to have your guard up going into the next relationship. It's a different person, it's a different situation, but you're going to carry that past baggage with you. You may have had hundreds of previous other relationships in the past that were completely fine and successful and you parted ways amicably. But your most recent experience, your partner was unfaithful, you now have your guard up. You're now very, very defensive about what you do, right? Much like if you drive and God forbid, you get into an accident, you may have been driving for a decade before that, and you may be a very, very competent driver. But I can promise you the first time you get back behind the wheel after your accident and you go to a junction and you look left and you look right, you're probably going to double take or triple take and you're going to overthink it and you're going to be a little bit more cautious. Why? Because your mind puts more emphasis on recent experiences, right? So the advice that I give a lot of people, David, is firstly, be aware that your mind naturally falls into these patterns, right? I would actually go as deep to say that there is a great benefit in understanding what your pattern of behavior is, which is how long does it take for you to go from confident individual to overwhelming doubt in my approach in the markets? Is it one loss? Is it 5 losses? Is it a month of drawdown? Like, how long does that take? Because that pattern of behavior, it doesn't happen by accident. It's likely to happen again and again going forward. Now, why I say it's beneficial to know what that time period is because the more awareness you have around your patterns of behavior, the more you can start being prepared for that moment of time, right? I know, for example, for me, I don't start questioning or doubting my strategy or overthinking anything until I get to around 4 or 5 losing trades in a row. I've mentioned I started 2025 with a couple, not phased. I'm cool with that. When I get to 4 or 5 in a row, I'm mindful that my natural default state is my mind starts producing these thoughts and comments and questions like, you doing the right thing? Are you really approaching this in the right way? And I have to check myself. I have to say, right, is my execution actually good? Am I doing the things that I am supposed to do in alignment with my strategy? And of course, I'm hoping the answer is yes during that period of time. But I'm mindful of that pattern and it allows me to be prepared, right? Now, what I say is, if you take on board what I said about recency bias, the reason most people struggle with it is because it tends to work against them rather than for them, right? What I mean by that is, firstly, most people don't understand that recency bias exists whatsoever. They don't understand the human tendency that we tend to go through by default. But secondly, because they're not aware of it, recency bias controls them. Their recent experience is really, really good. Bang. They're now very, very confident, and that screws up their performance. Or their recent performance absolutely sucked, and bang, anxious, overthinking, questioning my results, feeling doubtful about everything that I'm doing, right? Why is that happening? Because of the recent experience. Now, when you start to get smart about this, a technique that I teach a lot of my clients to go through here is to understand that if your mind is going to prioritize recent experiences, can you curate recent experiences that reflect the type of balance that you want to have in your emotions? For example, I truly believe that the best emotional state that you could have is a point of equilibrium, right? For me, emotional equilibrium is a balanced state between I'm not too confident, but I'm also not living in complete fear. Because if you're on either end of the extreme, it messes with your performance. You need to operate from a place where you don't want to bet the entire farm on the next trade, but you also don't want to be so paralyzed or fearful about the next outcome that you don't actually execute whatsoever. You need a healthy amount of skepticism and pessimism balanced out with a little bit of optimism, right? That's for me is like emotional equilibrium. So what tends to happen in the situation that you're describing here is that January has been red right from the start. That's your recent experience, and it's swaying that you're swaying you from a point of emotional equilibrium to a place of fear and doubt and anxiety and worry, right? What do you need to do? You need to get yourself back to equilibrium. What will get you back to equilibrium is ideally what you want is a more positive performance, right? I can promise you, after you've had a red streak, your first winning trade is going to feel unbelievable. It's going to feel like such a relief. Your mind is going to be saying, I knew my edge still exists, when in reality, one trade means absolutely nothing. But these are the games that your mind plays, right? So what I encourage you to do is actually start to leverage how recency bias works. We understand that our mind is swayed by recent experiences. The problem is your recent experiences, my live trading has sucked right from the start of January. What should you be doing as a result of that? Understanding that your mind is moving into a place which is not going to be optimal for your performance, and then revisiting data or back testing or statistics that support the idea that if you just stick with what you are doing now, it will work over a larger sample size of time, right? And again, this is something that I've been doing for my strategy. I'm looking at my performance over the last 6 months. And if I only isolate that period of time, I'm going to sit there and I'm going to say, man, you suck. You need to throw this in. Maybe you just need to be a full-time coach and somebody that doesn't do this behind the scenes. It would be easy to do that, right? But what I am focused on instead is I want to look back over data and statistics to say, okay, this was 6 months, and yes, it wasn't that great. But what happens if I look over the last 1 year, 2 years, 5 years? Like if I was just consistent with my plan over that period of time, how would that improve my mindset and then subsequently my ability to be consistent with my plan? And then what have you done? You've artificially created a recent experience because of the exercise, because of the reflection, that is going to get your mind to move back from a place of doubt, fear, back to that place of emotional equilibrium, right? David says, great answer, seeing a recovery and also truly believing in zooming out, as you said too, as this is just a small amount of time in the grand schemes, that's the way to go. 100%, right? But the true is also, this is also true of the opposite side to this as well. So again, this is a nugget for anybody else watching that is experiencing this shift away from emotional equilibrium. If you get to a stage where, let's say your last 2, 3, 4, 5, 10 trades in a row, I don't know, let's say they're all winners. Let's say you have a very positive win rate and you have a, I don't know, 70, 80% strike rate in the market. And having strings of winning trades is not unnormal to you. Unnormal? Is that even a word? I don't know. It's not unusual. That's probably a better way to put it, right? It's not unusual for you to have strings of winning trades, but you start to recognize that actually after a string of a few winners, I start to get really, really overconfident. And then I start to believe that the sun only rises when I tell it to rise. And then I start neglecting certain parts of my plan. And then I have this big blow up moment, which sets me back a whole month worth of progress, right? In that moment, what are you experiencing? Recency bias, but instead of negative, it's positive. In the exact same way, the moment I start to realize that my mind is going into this place of overconfidence and I think I'm too good to follow my process, I want to humble myself. I want to look back on the periods of data and statistics that show me that actually there can be periods of time where I can truly suck in the markets. I could do everything right, but the market is constantly just going to spank me and not reward me for doing everything right. I need to humble myself in that moment. And I need to take my mind from a place of overconfidence right back to a place of emotional equilibrium, right? It's all about finding that balance point. And I think where a lot of, especially new traders, make the mistake of doing is they think that it's a very linear thing. They think once I have confidence, I will always be confident. Maybe I'm just a flawed individual, but at least from my experiences and the experiences that I've had over time, being fortunate enough to speak with hundreds of traders over the last few years, I tend to find that confidence is not static. It's very much dynamic, and it can swing way too much on the side of overconfidence and way too side where you lack confidence. Your ability to succeed and to be consistent is largely about figuring out which side of the spectrum you sit on and then having a good process to regulate and bring yourself back to emotional equilibrium. That's what I truly think consistency is about, right? So it's very much an active piece of work. And I think this is true even if you're a mechanical trader, even if you trade with an algo, having that mindset. Like I remember one specific scenario, and I'll keep this brief because I know we're approaching the end of today's session. But I remember speaking to a trader that traded with an algo that he assured me he has enough data and statistics to show me that it works perfectly fine. The problem is the algo, of course, like any strategy, wasn't perfect. And when it took losses, he, as the human, overthought it and then started meddling with his approach. He would sometimes stop the algo from running, therefore missing out on potential trades. He would sometimes try and tinker with the positions away from what the algo was coded to do. It completely defeated the purpose. So even though he had probably done the smart thing, which is get his strategy coded into an algo that would run without him, kind of removing that emotional element, the fact that he still would not accept the short-term variances in the way that the market moves still screwed up his performance in the long run. So I think it's a great way to think about things, regardless if you're a mechanical or trade in any sort of automated way in the long run. Okay. Final reflection piece before I wind down here. I want you guys to come into January and, again, like I said, have the right intentions and tone to start the year. I want you guys to remember that this is very much a long-term game. Especially on a platform like this, we are not providing any sort of idea where, we're trying to encourage short-term rewards. We want you guys to be thinking long-term, and that means you have to prioritize process over outcomes. It means you have to think about execution over short-term excitement. It means that you have to be in a place where you can prioritize awareness over emotion. In the certain periods of time. That's what this period is all about. And so if you're someone that's had a little bit of a break over, the holiday period, I want you to spend a little bit of time into January. Just get yourself back in sync. Get back into the flow of having those normal routines. That might be having fewer trades. It might be doubling down and making sure your preparation is correct. It might be doubling down on the time that you spend journaling to make sure that your mind is in the right place. Or maybe it's just taking an extra step back or having that time away when conditions aren't right or things don't go to plan, knowing that your mind is a little bit more sensitive because you're not super in sync with what has happened, right? I promise you this, January is not going to absolutely make or break your career. Right? Again, if it is, you're probably trading at too large of a size. I'm not saying you can't make significant headway during a period of time, but it's unlikely going to absolutely change your life. This period is all about just getting back into an alignment, getting back into the flow of things and making sure that you can be good for the rest of the 11 and a half months that sit ahead of us for the remainder of 2026. Okay. I hope you guys have enjoyed that session today. Again, like I said, kept it fairly light in terms of structure and more just raw, honest reflections about what I'm currently going through in the markets and some insights as to maybe how you guys can be thinking about adopting your mindset and your approach subsequently going forward as well. Okay, we will call it a day here. Thank you guys so much for tuning in. I hope you guys have found that valuable. Thank you to everybody that got active in the comments there. As always, I'm open to answering questions. So in any future sessions, much like David did today, if you guys do have questions, things that you want to run by me, please bring them to the sessions. I will make sure to allocate some time to go through them and give you guys a little bit of feedback on that. Thank you guys so much. I hope you have an amazing rest of the week, and I'll speak to you again in a couple of weeks. Take care, my friends.